Hello everyone and welcome back to the world of finance. Now, in continuation of a very important topic that we had been discussing in past couple of parts, that was exchange traded funds. What we have learned in exchange traded funds already in the earlier classes, the meaning and definition of exchange traded funds, the key components of an ETF, particularly 4 key components if you remember: the issuer or the sponsorer, then we have the custodian, then we have the authorized participants, and then the market makers. Then we have also observed that the structure of the fund, that is ETF, is like an open-ended fund. So it is having an open-ended structure. That means the fund will create and redeem the units in between the life of the fund. In other words, once the fund is offered in the stock exchange, additional units can be issued and the existing units can be redeemed by the issuer. However, this is not a trade between the fund issuer and public as investors directly. Here, only and only authorized participants can get involved in the creation and redemption process. So, I will just give you a brief idea of the entire structure of ETF process. So, just visualize that there is the issuer of the ETF, and the most important party along with that will be the authorized participant. So authorized participant is buying securities from the stock market and debt market, providing the basket of these securities to the fund issuer or the ETF sponsor or ETF issuer. In exchange of this basket, the ETF sponsor or ETF issuer is giving a creation unit which will be basket of ETF shares or ETF units. This is called a creation unit. Generally, it is in the size of 50,000, not necessarily 50,000 always, but generally it is in the size of 50,000. Now what will authorized participants do? They will sell these ETF shares or ETF units in the stock exchange, where the counterparty could be the market makers who will be buying in a big chunk in wholesale quantity and keep it ready as their stock. Other side, the counterparty could be the public, that is investors in the market. So what happens with an investor in the market? An investor who would want to trade in ETF can just purchase and sell the ETF shares or ETF units in the stock exchange, because these are securities that are traded on stock exchange. You know it very well, we have learnt it in earlier parts. Now, these public investors will be giving money and they will be buying the units of ETF. If they want to disinvest, means if they want to sell out these units or shares, they can again sell it back to the stock exchange. The counterparty could be either other investors from the public or the market makers. So market makers behave like a wholesale dealer over there. So they will be buying and selling in big chunk these ETF shares or ETF units from the authorized participants and then sell it on individual basis to the investors in common, that is in common public. So you visualize that big group of investors, people like you and me, we are going to buy and sell the ETF shares or ETF units at the stock exchange. We are just investors. We are trading on ETF shares or ETF units in the stock exchange. That is what we understand. We have no connection with authorized participants. We have no connection with the fund issuer. Not at all. We are just trading on these securities, which are ETF shares or ETF units in the stock exchange. Now that is the role of investors and stock exchange. The wholesale dealer in the stock exchange is the market maker. Who are market makers? What is their role and what is their importance? I have explained to you in earlier parts. Now, our objective of understanding this whole thing in this class is to focus on the creation and redemption process, which is the crucial aspect of exchange traded funds. How this works exactly? Let us try to crack it. So, initially, the authorized participants will be buying securities from the financial markets. A basket of securities will be delivered to the fund issuer or ETF issuer. These securities will be under the custody of the custodian. We have talked about the custodian also in the earlier classes. Now, against this securities received from the authorized participants, the ETF issuer will be issuing ETF shares or ETF units in a basket again, which will be a basket of 50,000 shares or 50,000 units in one chunk, which can be called as a creation unit. Depending upon how much value of securities have been transferred by the authorized participant to the ETF issuer, accordingly the ETF issuer will be providing these creation units, that is ETF shares in chunk, to the authorized participants. Authorized participants will sell this in the stock exchange, where ETF is coming up initially as an IPO and later on it is traded. And that time I told you the parties involved in the stock market who will be buying and selling the ETF shares or ETF units will be the investors in general public, and the major party over there as a trader will be the market maker. Now, what would happen when the authorized participant wants to redeem their units? So when would they redeem their units? There will always be a specific situation, and there you will find that whenever the market price of ETF shares or ETF units is having substantial difference from its NAV, definitely there will be an arbitrage opportunity, and that opportunity the authorized participant as well as market makers would want to take advantage of. Market makers will take advantage by buying and selling in big quantities the ETF shares or ETF units in the stock exchange itself. But that has a little role to play. The bigger role is with the redemption process and creation process, which the ETF issuer and authorized participants have between them. So in case of redemption, it will be just the opposite of the creation process. Now what happened in creation process? The authorized participants have purchased securities from stock market, and the basket of securities was handed over to the ETF issuer, which is ultimately held with the custodian. In the case of redemption process, the basket of securities will be given back to the authorized participant, and in exchange authorized participant will have to give back the ETF shares or ETF units, and it will be complete reversal of the creation process. Now use your simple common sense to identify when would the authorized participant want the units to be created and when they would want the units to be redeemed. This has a simple comparison of the ETF market price, that is the market price of ETF shares or ETF units, with their NAVs. So if the market price of ETF shares is greater than the NAV, we may term it that it is overpriced. Whatever is overpriced, someone would want to sell it, right? and when the market price of ETF is lower than its NAV, we would call it as if it is underpriced, and anything which is underpriced, someone would want to buy it. Now what happens? Buying and selling will happen in the stock exchange, but the creation and redemption units will happen with the involvement of this authorized participants. So let us do one thing. Let us write down the detailed process so that you understand it very well. And what I'll do is, for your understanding, the visual presentation of the whole process I'll be putting in the next part. So let us first write some important notes. Under the heading exchange traded funds, you write, understanding the structure and the creation redemption process is crucial for comprehending how ETFs function and maintain their liquidity and alignment with the underlying assets. Most ETFs are structured as open-ended funds or unit investment trusts or UITs. They issue and redeem ETF units or shares in large blocks known as creation units. So the creation and redemption process. The creation and redemption process is what sets ETFs apart from mutual funds and ensures their market price stays close to the NAV. So please write up this whole content before I take you ahead. Alright friends, once you have completed writing this whole thing, let us move ahead and continue writing further. Creation process. The first step over here will be the ETF sponsor provides a list of securities that ETF will hold, known as creation basket. An authorized participant or AP buys the securities in the creation basket and delivers them to ETF sponsor. In turn, the ETF sponsor provides AP with creation units of ETF, which the AP can then sell on the stock exchange. Let us take an example to understand this. If an ETF's market price is higher than its NAV, authorized participants or APs can buy the underlying securities, create new ETF units or shares and sell them at higher market price, profiting from the difference. Please write up this whole thing and then I take you to the next part of discussion, that will be the redemption process. Alright friends, once you have completed writing this much, let us move ahead and continue writing further. We talk about the redemption process now. An authorized participant or AP can also redeem ETF units by gathering creation units and delivering them to ETF sponsor. The ETF sponsor provides the authorized participant with the underlying securities from the redemption basket, which AP can then sell in the market. Let us take an example. Now this is going to be an opposite scenario. So we would say, if the ETF's market price is lower than its NAV, APs can buy the ETF units or shares at the lower market price, redeem them for the underlying securities and sell those securities at the higher NAV, again profiting from the difference. So please write up this explanation as well and then I take you ahead. Alright friends, once you have completed writing this whole thing, let us move ahead and continue writing further. Benefits of creation or redemption process. Number 1, arbitrage mechanism. The process helps keep the ETF's market price close to its NAV. If the ETF's price deviates from the NAV, APs can arbitrage the difference by creating or redeeming units or shares of ETF, thereby realigning the price. And the second benefit is the liquidity provision. APs and market makers ensure there is sufficient liquidity in the market, allowing investors to buy and sell ETF units or shares easily. So please write up this whole thing and then, as I promised you, I am going to show you the entire diagrammatic presentation of this whole process in the next part.